Imagine if the control of the world fell in the palm of a handful of people in a boardroom. How would you feel, knowing that this group controls more wealth than the GDP of almost every country on Earth? Surely no individual can have influence over that much wealth, right? How would you feel if you knew next to nothing about these people? Maybe you'll turn to your government for explanation, only to find that not only is your government deeply involved with these people, but they also rely on the group to oversee America's taxpayer money. It turns out this group not only holds unprecedented power, they're actually the cornerstone of the global financial system. Wall Street needed a major bailout when the 2008 global financial recession hit the market. In a state of emergency, the government calls on a veteran of the investment financial market, Larry Fink, a billionaire investment banker, and his asset management firm Blackrock took on the role of overseeing Washington's bailout of Wall Street. Fink won several government contracts to take on this role. Funnily enough, these contracts were won against no competition. Ever since, Blackrock operated under complete secrecy, never making a fuss in the media. As an asset managing firm, Blackrock had major stakes in the exact same companies they were helping to bail out. This conflict of interest didn't seem to bother the government much. However, Blackrock was given an unusually large amount of money by the Federal Reserve for the bailout, so much so that even members of Congress were unaware just how much money was being given away. The American government was desperate to save firms like AIG, Freddie Mac, and Bear Stearns. These financial giants had key stakes in different sectors of the economy. Had the government not bailed them out, major firms across America would have been crushed. Larry Fink and Blackrock became the middlemen between Wall Street and Washington. In the short run, it allowed financial institutions in the country to keep lending money. The American economy faced another massive challenge in the COVID crisis, when businesses and trading around the world came to a standstill. The Federal Reserve once again stepped in to bail out America's biggest corporations with the taxpayers' money. This time, however, they went a step ahead. The Federal Reserve began buying corporate bonds for the first time in history. This move reduced the debt crisis on America's biggest firm, at the expense of the taxpayers' dollars. But who did the White House put in charge to oversee the move? You guessed it, BlackRock. And once again, BlackRock was bailing out the very same corporations that it held the biggest stakes in. To say that Larry Fink became the world's most powerful man in finance would be an understatement. What's key to understanding here is that both times, the company played the desperation of the American government to its advantage. Given his and his firm's considerable power, it begs the question, who is Larry Fink? Larry Fink is one of Wall Street's most legendary investors, having developed the debt securitization market almost single-handedly. While working at Boston First, Fink became somewhat of a legend in bond structuring. Fink became a key asset to the firm until he lost a deal worth $100 million simply because he failed to take a call. Once he was fired, Larry was determined to make his way back into finance. Joining forces with Stephen Schwarzman, he founded the Blackstone Management Group. Starting with just $5 million, the Blackstone Group was managing $20 billion within just 5 years. However, Fink soon cut ties with Schwarzman and founded his own company called Blackrock. Blackrock had gone from strength to strength ever since, going public for $375 million in 1999. When the 2008 crash hit, BlackRock was in control of around $4 trillion worth of assets. After the pandemic, this number shot up to nearly $10 trillion. To put into context, BlackRock is managing more money than the GDPs of every single country in the world, except for China and the US. To give you an example of just how many different assets fall under BlackRock's management, imagine if you wake up one day, get ready for office, you check your time on your iPhone and answer an email on your Microsoft computer. You then leave for the office in your car and get gas at an Exxon Mobil station. and then you grab an Egg McMuffin from McDonald's because you forgot to have breakfast. In the meantime, your salary was deposited into your Wells Fargo bank account. You interacted with products from Apple, Microsoft, McDonald's, Wells Fargo, and ExxonMobil, all in about half an hour of time. But what if I told you that BlackRock owns a major stake in every single one of these companies? BlackRock has built its business encompassing major endowment funds. BlackRock manages some of the biggest pools of money, like university endowments, pension funds, mortgage funds, and individual deposits by some of the wealthiest people on Earth. This explains that Larry Fink has at least some level of competence in managing the bailouts of Wall Street in 2008 and 2020. But becoming the government's primary choice is also the result of the fact that Larry Fink has practically designed the debt securitization market. So who else but him to clean up the mess that this market had made? Surely you wouldn't want to make a mess like that, right? Getting some information wrong about a global event? Maybe your friends will make fun of you, right? Wrong. All you have to do is like the video and subscribe to the channel to keep up with the latest news in the world of finance and technology. No more fake news. Now back to the video. One can wonder just how BlackRock has been able to get as successful as they have. Well, it turns out BlackRock makes use of a supercomputer known as Aladdin. Aladdin was launched in 1988 by BlackRock's risk management division called BlackRock Solution. Essentially, the electronic network is a network of some 5,000 computers that keep a check on the assets of all of BlackRock's assets. In the year 2000, Aladdin was introduced as a system for investment management users. This meant that it now had more access to more than just assets of BlackRock. It's become central to the entire asset management industry. The Aladdin database analyzes markets all around the clock. This means the company gets access to sensitive information from banks and insurance companies to do this analysis. Whenever Aladdin sees an opportunity in the market, it allows BlackRock to allocate its assets accordingly. It even estimates the need for tedious paperwork from the asset management business. BlackRock's Aladdin has 240 different clients, and the computers have their eyes on 10% of every publicly traded share on the planet. This amounts to almost $21 trillion in value, which is around 80% of America's entire GDP. A different side of this story tells you that BlackRock isn't essentially a powerful organization, and all the shares and assets they oversee are just assets of their clients. Technically, BlackRock doesn't own $9 trillion in assets. It simply manages those $9 trillion for its customers. Larry Fink himself has come out to give public statements, denying any rumor that he's the most powerful man in America. While Fink sits on important roles, such as having a seat on the World Economic Forum and the Council of Foreign Relations, this gives Fink easy connections to some of the biggest businessmen on the planet. But it also means that he holds both influence and responsibilities. As such, BlackRock CEO has been able to push for the implementation of ESG scores in the modern market. So, what exactly are ESG scores? ESG stands for Environmental, Social, and Corporate Governance scores, which rate a company based on its social contributions. For example, an environmental policy being introduced to reduce carbon footprint will increase a company's ESG score. On the other hand, companies engaged in unethical practices are heavily scrutinized in the ratings. While some people may dismiss this, the reality is that ESG ratings have become the norm in earning calls in today's climate. Investors want to make sure that they invest in responsible companies. The problem most people have with Larry Fink's advocacy for ESG scores is BlackRock's utter hypocrisy. BlackRock has made most of its modern-day wealth by investing in companies that profit from fossil fuels and war profiteering. Some of the biggest profits BlackRock has made have been made through its assets in companies like ExxonMobil. ExxonMobil was responsible for 2% of all the carbon emissions in the world. To put this in context, South Korea, with a population of 51 million people, is only responsible for 1.6% of global carbon emissions. BlackRock has influenced some significant changes at ExxonMobil. In partnership with other stakeholders, BlackRock was able to install new members on the ExxonMobil board of directors. These were members who made promises to bring down Exxon's reliance on fossil fuel burning and take decisive actions on climate change. But many people think it's too little, too late. BlackRock is also a big advocate for strict gun control laws in the USA. At the same time, BlackRock is the single largest investor in the gun manufacturing industry. BlackRock maintains a 15% stake in Vista Outdoors and a 16% stake in Storm Ruger, two of America's firearm manufacturers. With such investments, Larry Fink's statement on gun violence seems more like virtue signaling than meaningful change. But one of the most dangerous precedents BlackRock sets is with its U.S. defense and aerospace funds. These funds represent BlackRock's stakes in firms like Raytheon and Lockheed Martin. These weapon manufacturers are the biggest beneficiaries of war profiteering in the world, with uncontested Pentagon contracts under their belt. These companies have been heavily criticized for their roles in wars worldwide. Yet, BlackRock, the champion of ESG ratings, does practically nothing to give up its stake in those companies. ESG ratings may not even have the same response many people think they do. This is because ESG ratings have given rise to the phenomenon of greenwashing. Companies will spend massive amounts of money on showing off their socially responsible side. When Black Lives Matter protests were going on in 2020, major corporations pledged their support to the cause, even donating millions of dollars to NGOs working for the interest of African American communities. Nike pledged $40 million to BLM charities in America. At the same time, Nike was allegedly operating sweatshops in countries like Bangladesh, which employed children. BlackRock manages around 7% of Nike's share for its clients. BlackRock was also the first global asset manager to have direct access to China's mutual fund. In a country as authoritarian as China, it's very rare for a foreign player to be working so closely with the government's money. China's human rights violations are also another mockery of the ESG ratings that BlackRock continues to uphold. With close ties to the Chinese Communist Party, many are concerned about the role BlackRock is playing. BlackRock also has major stakes in some of Russia's most dominant companies. While BlackRock did pull out its assets from Russia when the Ukraine invasion began, it had already contributed significantly to the Russian economy in the years prior. So, is BlackRock really secretly pulling the strings to run the entire world? Well, the answer is not very simple. Many of the world's biggest corporations and banks have major shares managed by BlackRock. This makes BlackRock a key stakeholder in many different companies. As such, these companies try to remain in BlackRock's good books. If BlackRock pulls its assets out of these companies, it could spell trouble for them. At the same time, BlackRock and other asset managers like Vanguard and State Street control stakes in almost all major enterprises in the world. Vanguard and State Street have made similar promises to comply with ESG rulings, but the assets they manage include some of the biggest polluters and war profiteers in the world, just like BlackRock. These major asset managers hesitate to make the uneasy choice of pulling out of unethical businesses. Similarly, these asset management companies own shares of many of the same companies, including rival businesses. For example, BlackRock and Vanguard both have major stakes in Delta, United, and American Airlines. On paper, the three airlines are direct rivals. However, since they are owned by the same asset managers, they have no incentive to offer better services. Neither airline needs to drop prices either. This is bad for the consumer. On one hand, they receive substandard services, and on the other, they have to pay high prices for them with next to no choice. This consolidates wealth into the hands of the few while making it impossible for new companies to compete in the market. Even major corporations like Disney need to legally consult BlackRock for any decision, as the asset manager owns such a massive stake in Disney. While Larry Fink himself is worth just over $1 billion, his influence on major corporations is massive. To say that Larry Fink and BlackRock pull all the strings behind the scene of every major corporation on Earth is not true. BlackRock only manages the $9 trillion put under its trust by clients. It doesn't own them. These clients can choose to switch to Vanguard or Fidelity investments if they please. However, when the government of the United States appoints you to oversee the bailouts of the country's financial markets, it gives you unprecedented influence. To suggest that Larry Fink isn't a powerful individual, even with over $9 trillion under his company's management, is naive. In the simplest terms, BlackRock doesn't own the world. However, it does hold influence over some of the biggest institutions in the world, as well as the governments of superpowers like the US and China. If you enjoyed this video, be sure to hit the like button and subscribe to the channel. Thank you for watching, and see you next time.